The stock market is pulling back, and this was something I have warned about a few times on the channel as valuations are stretched and FOMO seems to be the most popular investing strategy as of late. Movements like we've seen in the last few trading days are here to give investors a reality check that stocks just don't go straight up. Yeah, over time, stocks do trend higher, but there are pullbacks along the way. Now, these pullbacks can be caused by many different reasons, and I want to discuss some things that I personally see out in the market today, which could be contributing quite heavily to the sell-off that we've been seeing this past week. As of recording this video, the market is down around 3.5% on the day, which is pretty significant pullback for one trading day. And we can see the majority of stocks are declining, with over 80% of them actually down versus less than 20% of them actually moving higher. So this is a true broad-based sell-off. But out of all three indexes, the Nasdaq seems to be the biggest loser so far, with nearly 5% losses on the day. So what's going on? Why are the markets selling off? And more importantly, what can we do as investors to actually prepare ourselves for potential buying opportunities here? So this is going to be the focus of today's video, so make sure you stick around for the entire video to gain the most amount of value out of it. And guys, if you do find this valuable, consider smashing that like button down below because it helps out the channel tremendously. So thank you so much for that. But either way, let's get into it. First, let's put things into perspective. Year to date, the markets are up, and from their March lows, they're absolutely booming. The S&P 500 is up nearly 55% from its lows in March. Dow, we have a similar story here, up 52% from its lows. But the true star of the show, the tech-heavy Nasdaq, has outperformed both quite significantly, up over 70% a couple of days ago at its peak. And regardless of what index we're looking at, many individual stocks have just been up and away ever since the March lows. They did not look back at those lows, and they've made new all-time highs in many cases. And all of this was done in a span of just a few months with little to no pullbacks. But guess what? Reality eventually sets in. Stocks, like I said, don't move up in a straight line, and we eventually do see a sell-off like we are seeing it this week. Now, one of the big reasons we could be seeing this is because of profit taking. When stocks move up this significantly, investors are tempted to take profits in their positions. Many stocks are up more than double, triple your investment if you invested back in March or April. And you know what? When you see gains like that in just a few months, can't really fault investors for cashing out and taking profits. The other reason could be maybe rebalancing portfolios. Now, I briefly discussed this in a recent video with Tesla, because some stocks, like Tesla, are up so much that it's become a larger than anticipated position for many investors. And Tesla isn't the only stock here that's done extremely well in the last few months. Many large companies and small companies alike have outperformed, and as a result, many investors are looking at their portfolio and seeing stocks that they never thought would be that large become massive positions for them. So maybe investors, you know what, they're sitting down looking at their portfolio, they're saying, you know, this stock has moved up way too much, I don't want it to be this large in my portfolio, I'm going to take some off the table. And then they do that, sell it off a little bit, and use that cash to funnel into other companies which maybe have not seen as much of a recovery. And while if you look at some of the stocks I track, we can see the biggest losers if they have a common trend. High growth, software at its core, subscription services, cloud. These are all things investors have been seeking for the last few months as the world locked down and consumers and businesses shifted to doing more things online. And these stocks have done extremely well for investors for the most part. But you know what they say, all good things must come to an end. When we shift over here and look at some of the stocks that have held onto their gains or remained fairly flat for the day, the trend again is fairly clear to me. We see financials, restaurants, retails. These are all sectors that have hurt badly over the last few months. This tells me that money is flowing from some of these high growth, mainly tech stocks, to some of these well-established but beaten down companies and sectors that have seen little to no returns over the last few months. This is common, and sector rotation happens quite often in the stock market here as investors, funds, institutions all look to balance their portfolios to industries they see more upside in the coming few months. Now, the other thing that could have contributed to some of the selling and which could result in a lot more selling is the political risk that's surrounding us right now, and of course that's the elections. Elections are going to move the market whether we like it or not, either to the upside or downside. We don't really know yet, depends I guess on who wins. And if you're in my VIP membership group, I did discuss in there that, you know what, we're closing in on elections. September, probably going to see some volatility, and that's exactly what we saw here at the beginning of September. Just keep in mind, this typically does happen right before an election. You know, we see a lot of volatility in the market. Investors are not sure about what's going to happen. They try to cash out their stock and just hold cash to wait things out and see how the election goes. But typically what happens after the election's done, after we know all of the stuff, after the uncertainty has died down, investors go back in, put their money back into stocks, and we just continue moving higher. That being said though, in the next couple of months, this could probably be a major risk for the market here if you're looking at short term, and there definitely could be elevated volatility like we've already started to see here, which could continue until November. But speaking of volatility and risks in the market, there's another big elephant in the room that the market seemed to have forgotten about, and that's a possible second wave. So far, we've seen the economy recover month over month. Things are trending in the right direction. However, if a second wave pops up out of nowhere, investors have, in my opinion, not really priced that in. So volatility could spike once again, selling could ensure once again, and we could be back to levels that we haven't seen in a few months in a short period of time. That being said though, a lot of indicators are showing us that we are improving month over month. We are trending in the right direction. The economy is gaining strength once again. So as long as this continues, that risk becomes less and less, lower and lower. But guys, we never really know. This is new. This is something that's happening around the world. This could definitely pose a big risk. So just be aware of that. You can't really predict what's going to happen. But what you can do is just be prepared just in case it happens, so you can take advantage of it instead of panicking and selling your stocks if and when it does happen. So speaking of which, how can we prepare? Let's look at this chart here. It's the S&P 500, and I've labeled two things on here. The first is the moving average, and we can see the S&P 500 is very stretched right now, and historically we come back to at least the 50-day moving average often to test this level. And as long as this level holds, we continue chugging along higher over time. Right now, we're so stretched on the S&P that we're well overdue for a pullback, and this could be just the beginning. I would not be surprised to see this drop to around 3,300 or so over the coming weeks to test this level. And guys, depending on the volatility at the time, we may even drop below this a little bit to test the 100-day moving average or the 200-day moving average. But let's not get too far ahead of ourselves here. Let's take it as it goes. And I'm personally preparing for a possibility, a high possibility, of us testing that 50 moving average in the coming weeks. So just brace yourself for some possible selling. It could take just a few days if we sell off violently, but more likely than not, we'll gradually see some selling over the next few weeks as things calm down and we come down to test these levels. The second thing I note on here is the stochastics RSI, which signals to us how overbought or oversold a stock is, or in this case, the S&P 500 index is. And we can see that we've been pushing overbought levels for quite a few weeks here, so a cool off is also expected and much needed in my eyes. And I personally want to see this come down once again. We're at the high end of the momentum move up in my opinion, and it's time for a breather and time for us to cool off a bit, come down, test important levels, and then we can recover and start moving higher as long as we're able to hold those support levels. So what am I doing? Well, I'm actually still conserving my cash. I'm actually still building my cash position. But if you guys remember from a few months ago, I said that my goal was to really bring my cash position down from close to like the high 20s to around 20% or so. And that's what I have been doing. I have been deploying cash quite regularly in the last few months. And this has resulted me in bringing my cash position down to closer to the 20% range. But we still have a little ways to go, and I'm still deploying cash in undervalued businesses. I'm not going out there and buying Tesla. I'm not going out there and buying Apple. But there are quite a few businesses that I still absolutely love, and those in my VIP group know which ones I'm talking about, and that's where I continue to deploy my capital. I do hope that we see more selling because it would actually bring some of these large tech stocks down to more reasonable valuations, and maybe then I'll start buying more into those stocks as well. But for now, I'm just watching, let the market do its thing. I have my few favorites that I keep buying on a weekly or bi-weekly basis, and we'll just continue with that until things change. But guys, I'd love to hear your thoughts on what you think the market's current state is like and where you see the stock market going over the next few weeks or next couple of months. Do you think that this sell-off is going to be something quick, something we needed, and we're going to start pulling back higher once again? Or do you think this is the beginning of a much broader, longer sell-off that could continue all the way to maybe to the end of the year, maybe into 2021, and we'll see a lot more cheaper valuations in the coming months? Let me know in the comment section down below, guys. Love to hear your thoughts as always. But either way, don't forget to invest positively, and I'll see you in the next one. Peace.